Hello. Morning. Good morning, everyone. So here in the comments, I see there's gold, there's German 30, Old New Zealand, GBPJPY, Euro, GBP, Nasdaq, Euro, Zealand, Euros. All of them, they're different pays. So I don't know which pay do you want us to do. Like all these pays that you gave me, they are different pays. Okay. I think let's do GJ, right? Okay, we're going to do GJ. Okay, so let's look at GJ. So we are going to so we take it from the monthly view, first of all. So the reason why we do that is for us to get the trend. Where the trend is it going, right? So from the monthly view, you can see that, okay, maybe there's a channel, this one. So assume that this market, so assume that this market is moving something like this. Okay. And then something like this as well, like from that point to that. Okay. So from the look of things, we rather say maybe this was an uptrend, okay, and then it broke out here, it retested here, and then started consolidating. But now let's check the main trend. These are the main trends. What is the main trend? This one from that point to that point. Okay, so it's something like this in the monthly. So for us to get like very good points, we use the line graph to draw a trend line. So how to draw a trend line? We join the first 2 points. Like these are my first 2 points there, and then the rest is array. Okay, so let's change the color, but yellow is fine, then it's fine. And then from that point, we can observe that so our first point is this one, and then the second is that one, because this is the leg X that we spoke about, like, where we saw the change of direction. So we are more concerned about this place, something like this. Okay, so that's what we are seeing. So to me, From this, only this, I can simply say it's more of like a triangle correction, but yeah, we'll see what was happening. So yeah, that's how we draw it. So this is what we are getting from the monthly. Okay. Sorry, the 26. Right. So as you can see, the market came here around 2007. Yeah, 2007 July. They failed. They came up back again 2015 August. They failed. Then they came this year in June. So we are actually still trending on that point. Okay. So those are the other things that we're observing. And then, like we said, this is our leg X, this movement from that point to that point. That was our leg X, and then it started correcting in this manner. So we say this is our X, that's our W, X, Y. So you can see this has a W, X, Y. You can say it's a triangle because a triangle is an A, B, C, D. That's if they're gonna correct from this point, they must come down and form an E. But then we will see. But for the time being, we are gonna label this as in what? As an WXY movement. So that's my X leg. This is my W, and then that's my X, and that's my Y. So let's change to something like maybe micro. Fine. Okay, and then the color, let's use yellow. Okay, so this is what I'm seeing here. So this type of a correction, it normally happens in a wave 2. Of course, it can also happen in a wave B of a zigzag, and it can also happen in wave 4 as well. Which case it is WXY. Okay. So from there, what are we now? We are now more concerned about this area. I'm not going to talk much into detail because, as you can see, it's sort of like a 1, 2, 3, 4, and then a diagonal. So this is 5, and then this is like a 1, 2, 3, 4, 5. So this is a channel. So this channel, it's an ABCDE to give us this X. And then here also we get 1, 2, 3, 4, 5. That's our A, and 1, 2, 3 for B. And then an ending diagonal like a triangle formation for our C to give us a 5, 3, 5. So that's an ABC to give us this Y. Okay, let's just put as well that ABC on this leg. So you can see that we have something like this to give us that Y. Okay. Okay. So that's our monthly view. So now we are more concerned about this area. Is it going to break out or what? So we have to analyze this leg now. So we go up, down, is it up or down? And then we come on this weekly. Now we are here. So we no longer mind about what happened there because we are done with this part where we say that this was our final move for our leg C to give us our leg Y. So now we are concerned about this move right now. What really happened with this move? So as you can see on our weekly, there is a potential that this market, it wanted to retrace, but it's something that you must observe here. There is this weekly candlestick. This was the rejection. So meaning to say it's pushing the market to go up. So now this is price action now. This is more like the war between the bears and the bulls. So this was the rejection of that level, this level. So meaning to say price is pushing up. So it's more of like it's going up. But before we confirm anything, we're still analyzing it. So, and also we can see that it's more of like moving in a channel. Can you see that? You can see like to this point and that point to that rejection. So it's something like this. Right. So let's actually make it a dotted line. And you can also see that from that point to that point. Remember, we are on a weekly. So this is what we are seeing here. Actually from this point to that point, right? So now using the LO12 principle, we can see that there's an impulse in the correction. Then trace this area. Then there's another impulse. Then there's a correction there. So meaning to say, we are from the correction. Remember, we're from this WXY. That was the correction that we saw on the monthly. So now the market is forming sort of like a bullish channel. Okay, so this is what we're seeing right now. But before we go anywhere, you can see that there was an impulse here in the correction. So if you are to measure now using my strategy, our strategy, if you are to measure from this point, because this is a month, this is a weekly, right? So on a weekly, if you are to take your Fibonacci and place it there, it can give you, actually, it can show you that sort of Fibonacci retracement. So we are saying from this point to that point, that was the first correction, right? So you can see the market, it came in the zone of 61.8%, which is confirming that it's a potential wave 2, right? So, but now let's talk about this. This is still a correction, this one, because you can see that this kind of a correction, what type was it? So now I get my 1 here, and then this leg is my A. And then I get an A, B, C, then to give me my B, then I get a C to this point. So this whole movement was a correction. So I'm going to say this is my 1, this is my A, B, C for 2. This is my A, this is my B, this is my C. So that was the correction which we get here. And then from there, it moved. So now if you are to do this, let's start with the impulsive ones. So we say that that was my leg X, this is my 1, and then my 2, it ends there. So if my 2, this is my 3, and potentially this is my 4, and then I'm doing 5. But before I do that now, so we also want to confirm from this 2 for that 4. Okay, the 4, there is another third confirmation that this can be the 4. So where is it? It came in the zone. This is my zone, 38.2%. This is the zone where this market was rejected. And then in that zone as well, we saw that this candlestick shows some rejection. So we have a confluence, gentlemen. So that's a confluence. So it also gives me that there is a higher percentage that this market is what? It's going up. Okay. But now let's talk about this correction. I was saying that this correction is in this form, but let's change this one to, let's also put it something like a micro to find, yeah. Let's use the micro. Okay. So then we say that in that correction, there was an ABC movement, right? So we said that from this point to that point, it gave me my A, right? And then here it gave me my B, then it gave me my C, all right? But let's also change them to submicro. Okay. And also on that same note, for my B leg it was sort of like an extension because we can see there was an X, an A, B, C to give me that B. And then this one we will put it into yeah, let's put it into the new one. So don't get confused here. Now we place them nicely. For this A, then we got that A is then B, then C, give you that B, and then you have C to give you this 2. So now the bigger move is A, B, C. That was the correction. Then we are out, right? And then we saw that there was a rejection here, and also it's actually what we go following the principle of Elliott waves, whereby wave 4 it must not take out the previous high of wave 1. But now in this wave 1, there was an irregular shape here. That's why you saw that it's actually the B leg. It's actually higher than wave 1, which is very possible as well. Then that's our potential 4. So now we are from 4 now. And then we are so what's happening here in this one, we can call it breakout. And then the retest was of wave 4, right? So now we're trading wave 5, meaning to say that if these guys they are going to follow this channel, so our target it might be around that area, our first target. So our first target might be around this area for our 5. So this is an assumption, because now why are we saying that? Because we are following the principle of a channel. So after doing that, we will see from there if 5 is going to be extended or what. As you can see with these 3, there is 1, 2, 3, 4, 5 to give us 3. And there's this correction that we are going to look at on the daily time frame. So there's no signal yet. We're still analyzing, trying to understand what happened in this market. So we said something like this, okay, something like that. So now, as you can see, let's talk about this area now for our wave 4. So for our wave 4, we can see that the market was actually respecting this level, right? Let's change the color to white. Let's make it bold. Right. So we have something like this. So if we are to trade this this channel from wave 4 to wave 5, we are actually still waiting for the market to give us a breakout here. And also on daily, you can see that it's also confirming. So this was the correction for our wave 4. That was our A, B, and then our C, D, E. It was also a triangular formation. So and then there was a breakout here, because if you can check also this inner channel, because someone can come and say A, and then this whole leg it was for B, so it can be something like this. But let's leave this one, then I'll put another one. So someone can actually see something like this, of which that person, he or she is not wrong. And also let's make it dotted. Sorry about this thing. So, and then they can see something like this, right? So meaning to say that for my 4, it was from these 3, this is my A, this is my B, and this is my C. So this type of a correction is an A, B, C, right? we need to say that let's label it. So this will be my X, that's gonna be my A, then that's gonna be my B, that's gonna be my C to give me this wave 4. So actually, as we are doing this, I'm actually at a funeral. My grandmother, she passed on yesterday. So I'm at a funeral, but I'm just waiting for the bigger guys to do some arrangements and then we'll leave for the burial. But anyway, it's okay. I just thought of like, let's just do a session. It's been a while that doing sessions. So guys, you must not get lost, especially when analyzing these correlations. This is where a lot of people, I know there are some people who joined or who watch this, who are actually a lot of traders, but the problem is like they get lost with in between or what is happening. So remember this trend line, this solid one, it's from the monthly, whereby we say it broke that sort of in WXY correction. So you can see the market broke it and it started retesting. So from there, we saw this kind of a rejection, even on a weekly, it's a strong rejection, which means that we might be bullish until to that level in this market. But now we are here, we are not yet confirming any buy or sell. We are still analyzing. This is what we're seeing from the daily. Sorry, this is what we're seeing from the daily, guys. Okay, so right now, what are we doing? We are waiting for a breakout here. Then a breakout, then we buy it. Okay, so now, like I said, also you can see also in this C leg, it was an ABC to give us this the inner one, which is fine. Okay, so now let's go to H4. So now we are on H4 right now. Okay, so these are 3, and then for A, and that's our B. Okay, and then so you can see that now H4. What I will see. So now remember we're trading 5, right? We're from this 4. So we say that it was something like this. So that's how this 4 ended, right? And then there's an ABC to give you A, and then B, then ABC to give you the C for C. So these are inner ones. It's up to you whether you want to analyze them or leave them. It's up to you. No one can crucify for that. But as long as you know where you come from and where are you going. So we saw that there was a breakout here, and then the rejection. Can you see this kind of it was a rejection also? So from that analysis, now we're trading with 5, right? You can see that we have one movement, then there's a correction. So that would be my 1, 2, and then there's a 3, then there's this correction for 4. Can you see now my 4, it was a retest of this broken channel of wave 4. So meaning to say now I'm doing impulsive wave 1 of wave 5. So this is my 1, 2, 3, 4, and then now I'm constructing 5 for 5. At the same time, most I'm constructing 5 for 5, we know that there's an principle whereby it says that a wave 5 can be truncated, right? So right now what I'm doing, like I said, we are now waiting for the market to break out from this area, from this zone. So anything which is trading above this area, that's a least or a less risk. So now we've got confluence. Remember there we say that we are actually watching this bigger trend line, waiting for the breakout. Now also, we are also saying that we are waiting for the market to break above this, because it can say this can be the inner wave 1 of wave 5. It can be 1, 2, 3, 4, 5 here, meaning to say the market can be truncated, which is fine, of which we're going to go to H1 and see what are we seeing. If it's going to be truncated now, So that will be 1, 2, 3, 4, 5. Meaning say it will be 1. So we'll be expecting 2. Now, if you're going to be expecting 2, we're expecting the market to retrace maybe around in this area again. That will be a 1, 2, and then a 3. But if this is a construction of a stronger 5, we are still waiting for this market to break above this area and then we buy. But some people I know, I give a signal somewhere around here and then we came out here and then there was a correction and we bought it again in this area. You might be on break even, which is fine. Or else, if you are not in this trade, you rather wait for the breakout above here. Or I don't know if you're that kind of a guy who just take those kind of risks, you can buy it now and your stop loss mustn't be tight. It must be just below here. Okay, so this is what we're seeing. So now we've got 1, 2, 3, 4. So far, so good. We are not yet sure if this is the construction of one, because from here we can see, okay, let's go to, let me rather label this one. So now we've got this X, for this one, we've got this 2, we've got this 3, now we've got this 4. So then we are expecting 5 somewhere up there. But now it's gonna be something like this. Let me put micro, and also let's change the color to white. Okay, so this is what is happening now. So we are getting something like this. So remember the bigger, we are trading this 5, this bigger 5. So this is gonna be sort of like a wave 1 or 5, because if you have to check, we're going for a day, it's way up there. So they're gonna be 1, 2, 3, 4, 5 for 1, ABC for 2, 1, 2, 3, 4, 5 for 3, just going like that, like you know how this market moves. So now we don't have 4, 5 yet, but we are constructing it. So now we go to 1 hour. So now we are on 1 hour right now. As you can see, we have this wave 3, okay. And then there's this correction, so for 4. And now in that 1 hour, what are we seeing? So we're seeing the market gives us a bullish, a correction. So this can be 1, 2, 3, 4. And then after this 4, now they are doing 5. Can you see also when doing that 5, there's a 1, 2 correction here. So this is a 61.8%, meaning to say that it's still pushing up. But I'm not going to label these smaller ones, these minor waves, because it will be so clumsy. But we just have to keep in mind that they exist. As you can see, it came in the 78.6%, which is fine. So we're expecting a bullish movement. So if you are to buy this market right now, you can, if you were in a buy on this area or whatever, if you are to buy now, you buy and just stop loss, it has to be not even just below here. But anyway, so this is where we are. So we are expecting the market to come around this area. For our 5, that smaller 5, where is it? This one. And then from this 5, now we have a wave 1. So meaning to say, after this 5, it will be our wave 1, right? Because it will be 3, 4, 5. That's going to give us 1. And then from there, we expect these guys now. Again, it will be a breakout of this level. Remember that level we saw here. Let's go back on, is it on H4? This level, remember this level that we saw here? Right, this one. So after getting this 5 here, you remember it will be a breakout of this level. So it's going to be a breakout. Then that retest is going to be the wave 2 of from here to there. That will be that wave 2. And then we'll get that 2, and then we'll trade 3. So for the time being, this is our buy. But now our take profit target from this projection, it has to be the previous high. Like this is the what we call most key zone. So this might be our first take profit. So we're expecting this market to come somewhere around there. And then from there, that will be my 1, 2, 3, 4, 5 of, that's gonna give me wave 1. Remember, I'm trading wave 5, so that's going to give me wave 1 or 5. So let's assume that they get to that point, because this is an area of concern. Let's just project in that manner. I want to show you something. So let's say that these guys, they came to this area, right? In this area. So that means it's going to be my wave 1. And then I'm expecting them to come for wave 2. Can you see that when they retrace, they're going to come again in this area? So they might come and spike in this area, which is also fine. And then they close above. So we check the following week, but in that week that they're going to retrace, we check what they're going to do the following week. That candlestick, how they're going to close it. So I believe that they'll close it above again if it, in this what with this trend line. So that's going to be my 1, 2, then I'll trade 3. So yeah, so that's our projection in this on this analysis on this pay. So I'm going to unmute everyone, and then you guys, if you have got questions, any contributions, please, yeah, you are free to ask. So you can unmute yourself, and then let's have a 9-minute discussion. I'll take questions one by one. Hello, you can feel free to ask anything that you want to ask, guys. No questions. Okay, let me unmute you guys. You can go and unmute. So you guys are fine. Okay, so yeah, that was our analysis on GBPJPY. Okay, there's someone who's open for a question. Kanye, you can
how are you? My question is, so from here, what must we do now? We're gonna sell for a while, or we must start buying?
Okay, for me, there's no sell signal here, my brother. It's a buy, because there's this rejection. Remember, like what I said. So now we are from this 4 of wave 1, right? We are trading 5 of wave 1. So, but that 5 of wave 1, we're expecting the market to come around that area. So it's sort of like a swing trade. But remember what they do, these guys, they don't just go like straight forward. They will correct like this, but they'll be going up. So that's our target. So what I can say is just rather wait for them to break above this area, this previous resistance of wave 3. So let them to break it above. And then when they break it above, you buy. Or else, if you are to buy it now, which is fine, because on this leg, you are seeing that there's a 1, 2, 3, 4. Now they're doing a 5. Once they're doing that 5, you can see there's a 1, 2 here. So they're going for that 3. So meaning to say there's a potential that they'll break it. But I don't know when, but they'll break it at the end of the day. It might be this week or next week, but they're going to break it. So to me, I won't be looking for sell signals yet. I'll rather wait for what? For buy entries. So you want to join, maybe you are that somebody who trade trend lines, put a trend line like that. So if you were to buy, you're supposed to buy on this first rejection here, or you wait and see if they're going to come again and reject it here. But above all, look for buyers and sales.
All right. Thank you.
Okay, it's okay. No problem. Anyone else? We are left with 6 minutes. Okay, no, thank you very much, guys, for joining. I'll actually pause this video for those who want a revision. So just revise and understand what we're talking about. I believe from there you find out exactly what I was talking about. But thank you guys for joining. Enjoy your day. Bye.